when I have to start?
You're good to go. Thanks, Sumit.
Great. Thank you once again, Diwakar, Nidhi, for the introduction, and thank you, BrainCity, for giving me this opportunity to present my ideas, my strategies for the stock market. So as the topic for the day goes, it's all about winning, basically. So winning strategies in the stock market. A lot of you might have tried out your luck in the markets, and sometimes we win, sometimes we lose, but then there are strategies that help or increase the chances of you gaining money. And at the end of the day, guys, this is what we are there in the stock market for, right? So I want to start off with basically giving you an idea, an overview of what we are going to do here. So here is something that you should know, that there is a way to beat the odds in market entry. If you somehow find a way, which are the kind of stocks, which are the kind of industries are about to boom, you probably have a higher chance of winning. Your investments will lead to more profits for you, and that's what we want. So we'll cover this in depth, beating the odds in market entry. Next, if you guys can see, and I don't know how many of you are aware, by the way, that if you have a portfolio of stocks in the market, there is a way to buy an insurance. We all have some kind of insurance, whether it is our car insurance, whether it's medical insurance, life insurance. But sometimes people do not realize that there is a way in the stock market allows you to do this, is to buy an insurance for your equity investments. We will cover this also. So start getting excited. This is coming your way. Some other topics that I have lined up for you is how to earn dividends from non-dividend paying stocks. I mean, you create your own way of earning money from stocks. Even if you don't want to sell your stocks, there is a way to keep earning regular income. And then finally, there is something called how to draw a horoscope for your stock. So all this is there, as Diwakar is saying, share the knowledge, pack it up for people. There are a bunch of very excited people. So I'm putting it all in front of you, beating the odds, buying the insurance, earning dividends, and drawing the horoscope. With proper knowledge, you will also be able to do this. So, guys, Diwakar has already introduced me, but let me give you some additional details that will help you connect how I think about the stock market and what is the overall strategy that I am about to share. So my name is Sumit Dora. I'm a CFA charter holder, which basically means I'm authorized by the CFA Institute USA to advise people on investments and be doing the research analysis as given by the financial authority, the statutory body. This is the same method which Warren Buffett utilizes. This is the same kind of methods which most mutual fund managers utilize it. So if there is a way you guys can adopt the same method, maybe you can also increase your chances of winning. Just by background, I would say I started my career with NDTV Business News. I was one of the early employees on their business desk. I have more than 20 years plus, I would say, experience working in strategy companies, McKinsey and Boston Consulting Group, where I met Diwakar. Basically, I'm now advisor to a lot of startups, and I am known for training people on exotic instruments. Exotic is the whole key buzzword, I would say, for Indian markets. And finally, there is a theme, the thematic investment approach which I use, which I'm about to share with you. Guys, before I go in, here is something that you should know. Whatever we're going to discuss today is going to be for education purpose. I will be using certain names, certain stocks. Please do not see it as a recommendation. At the end of the day, stock markets are very risky. As you see the riskometer saying it's highly risky. And so what you need to do is your own analysis. You need to do your own analysis before investing. And I will try to teach you in the next 30 minutes what is the high level view on analysis that you should take up your end, because it is now very, very simple. So understanding macro environment, see, we are all investing in some kind of business. If we don't understand the environment in which this business is operating, chances are you are just playing with fire. It's your hard-earned money, and then you're trying to play with fire. So what all do I need to see in the macroeconomic environment? Doesn't have to be too complicated, but I'll try to put you or push you slightly here and see if this relates with you. So here is something you might have seen. There is a economic cycle, right? An economic cycle pretty much, one sec. Yeah. Ideally, this keeps going up and down, meaning from peak, there is a peak where you can see my mouse, then there is a trough. So economic activity in any country, it's not just restricted to India, in any country keeps moving at a higher speed and at a lower speed. As the speed is increasing, economic activity is increasing in our country, we say that we are recovering. As the economic activity slows down, we are entering towards recession, and we end up at a lowest point, which is trough. And what is the highest point? I mean, these are very regular terms that you guys are able to relate to. Peak and trough. Peak and trough is how any economy would move. So if this is something you can understand, there are two other curves which follow the economic growth. Economic growth in the country can also be checked by these two other lines. Guys, can you see? There is the economy line, which is basically the blue color line in the middle. Then there's a red color line, which is the stock market. And then there's a green color line, the interest rates. These are the only three things that I would want to talk about when I talk about the macro environment. Please see, guys, whatever is about to happen in the economy will first be reflected in the stock market. So we are talking about interlinkages. If you are taking notes, this is the time to write this down. If you are not aware of what this economy is reflecting, what the stock market is doing, this is your chance. And you will also get an opportunity to ask questions. Diwakar is, I think, looking at the chat. If you have anything upfront, please do mention. I would try to go slow. For most of you, this might be very, very, I would say, new. And if this is something which opens up an eye or opens up a new knowledge base, please be very, very attentive. I would say stock market is a leading indicator. What is a leading indicator, guys? Basically, if anything is about to happen in the economy in the next 2 quarters, 2 to 3 quarters, let's put it this way, 6 to 9 months from today, if anything is about to happen in the economy, the stock market should reflect it. That's why it's called the leading indicator, guys. Leading indicators. Everybody who wants to get a sense of what's happening in a particular economy, whether you are looking at the US economy, whether you're looking at the Indian economy, just go and look at the stock market or the broader index, stock index of that country. And next, if you see, I mentioned there is something called interest rates. Interest rates is the lagging indicator. Stock market was the leading indicator. Interest rates are the lagging indicator. If you guys know what does lagging indicator mean, basically something that happens after the event. So if a growth is happening in the economy, the interest rates will move after that. If growth is not happening in the economy, again, the government or the RBI, in our case, will change the interest rates. What kind of change is about to happen? Who makes these changes? What is their objective of making the change? We will find out. So before I go into the nitty-gritties, I want to show you some news articles that were appearing. News articles that came our way last year when the pandemic hit us. So if you see May 2020, there was discussion that India's growth is 5%. And then when the third lockdown was announced, if you can see where my mouse is, the growth was estimated to be 0%. And then by the time we reached August, guys, if you have been reading newspapers, regular newspapers also, not financial newspapers, our economy hit very badly. We had a negative growth for a very first time. Never seen in the Indian scenario, a minus 24%. Minus 24%, never seen in 40 years. This kind of an activity, that means India's economic activity, India's economic growth had been completely stopped. And what was the result? If you guys can think over this, let's go back. When I mentioned that the economy, what happens to the economy? If it is growing at a fast rate, you are probably looking at this green colored arrow. And if it is falling down, you are looking at this orange arrow. So our economy slowed down and hit a trough. What was that trough? Let's have a look very quickly. This is coming your way. An economy growth, if you see from liberalization 1991, our economy keeps going up and down, up and down. So it came to a level where average growth in our country was 7%. And last year, for the very first time, I repeat, our country had a negative growth, minus 7%. And if we just now focus on the dotted area from 2012, see guys, who's responsible for that minus 7% growth last year? This quarter 2020, first quarter of 2020, when I would say the worst period, when all economic activity had to be completely shut down. This is the negative 24% which I was talking about. But now here's the good news. This is what should keep you also excited. Our economy is about to grow again, of course, and we are probably already experiencing it. So what is the growth all about here? The growth that is being discussed is 11 to 12%, by the way. We are about to grow back on 11%. Now, if this is the expectation, if this is what economists are talking about, how do you think a leading indicator like stock market is reacting? Can you see this? Can you see this? How our stock market, and this is a very long view of our stock market, but if we just focus on the top right, in fact, this is something 3 weeks ago that our broad market index, stock market index, hit 16,000 for the very first time. And this was being discussed in most newspapers that it could hit 17,000. Now, the first thing I showed you was the larger framework, that anything that is about to happen in the economy is first reflected in the stock market. So what was the case? Stock market is already showing a jump of 100%. From 8,000 levels, it has moved up to 16,000 levels. Why? What is the expectation? This V-shaped growth. V-shaped growth, as in we hit minus 7%, and now we are about to come to 11 to 12%. So this is what is driving our stock markets. Question is, are you participating in that or not? How can you participate? What is the best way to entry? That is the topic. You want to increase the odds of market entry. You want to have the best prices. So let's go further. Guys, if we know this is happening, what is next? Let's look at the third element. What is the third element in our framework? The interest rates. Now, since last year, the RBI government has been reducing the interest rates, whether it was savings rate, whether it was the fixed deposits. In fact, if you see what SBI is offering, 2.75. Most of us would be aware of these kind of rates because now we don't get that kind of interest at the end of the year, which is even good enough to beat inflation. And that's why we read these news articles which say actual return from SBI savings account is minus 3%. So why did the government reduce interest rates? Why did the government reduce interest rates? What was the reason? See, where we are, how does the interlinkage work? When the stock market is going up, the expectation is the economy will also go up. At the same time, can you see that interest rates are pretty low? The reason why the government likes to reduce interest rates is so that it is comfortable for most of us to take new loans. The main objective of the finance minister right now in our country is suggesting to take new loans, and reducing interest rates is nothing unusual. I want to show you this slide, which basically focus on that in the past also, whenever our economy got hit, whether it was in 2001, the dot-com bubble, 2008, the Lehman crisis. Can you see how this line, the blue line, came down, and last extremely hit scenario was the Lehman crisis. The RBI reduced interest rates. This is the interest rates on the right hand side for you guys. Interest rates were drastically reduced. Why were they reduced? So that it becomes more attractive for individuals, for corporates to take a loan and invest more and bring the economy back on track. Can you see how 2004 is suggesting in rise of interest rates? Again in 2009, the government starts to increase the interest rates. The objective was achieved, to lower the interest rate, and the economy comes back again. And the government also starts to increase the interest rates. Now, more recently, if you see economic stimulus that was announced, that was in the form of loans, cheaper loans, collateral-free loans, housing loan subsidy. This is what the government is focusing on. If this is what the government is focusing on, what kind of stimulus have we achieved? Some newspaper actually went on to say that this is like a economic stimulus of 20 lakh crores is a loan mela, right? This is last year, 2020 we were talking about. Now, what has happened? Ideally, the government should have increased the interest rates, but over the last year, no new investments have happened. Our economy is still probably thinking of growth. Okay, it is expected to grow, but still not grown, right? So 2021, the government becomes very desperate. Now you see these kind of headlines. Even defaulters can borrow. And what is more, this is very recent August article. Government says we are going to step out our loan dispersal program. During festivals, people like to take more loan for home, education, personal, and let's have something for northeastern states. All these articles are coming your way because the government has a plan. Reducing interest rates has a repercussion, right? So the loan push that the government is doing is only to bring back the economy, to bring back the GDP. What is GDP, guys? By the way, if we consume more, if we invest more, the economy will rise. By the way, the GDP has two parts. If the government spends more, or we as individuals, we as business owners spend, the economy will rise. Why? Because for some of you, if GDP definition is not clear, it's now on your screen. GDP for any country means the value of all goods and services sold in our economy. So how do we know that the economic activity is back on track? If GDP is rising. And how can GDP rise? As I said, either the government spends the money or we spend the money on consumption and investment. So the whole idea is, guys, you think about it, government is doing its bit. I think this is one government I have seen which is highly committed. And here you might have seen these kind of articles. Government is spending, government is doing expenditure to a large extent on roads, railways, infrastructure, power plants. All this is being done. Why? Because government's investment has a multiplier effect. If we have more of roads, railways in the economy, more business activity can happen. And can you see the budget allocation? Extremely high, extremely high. So what does this mean? Government is doing its bit on increasing the GDP. It's desperate to increase GDP. It is also asking us to spend more, to consume more. And how is it doing it? By lowering the interest rates so that you and I take the loan. If you think over it, guys, what do we take the loan for most of the times? Some small ticket items to start off with. If interest rates are low, if I just ask you, if personal loan becomes very attractive at times, you go and spend some money by taking loan. You could have a lavish lifestyle, you probably travel and all, but now specific loans are also available. So this is the first thing that people were buying last year when interest rates were lower. They went ahead to buy a new washing machine, a new microwave, a refrigerator, and so on. And maybe that was the need of the hour also. Most of us did not have domestic help. So people started buying this. And as more confidence comes in the exactly white goods, as more confidence comes in the economy, people are willing to take a higher loan. So let's say this kind of a loan would be roughly up to 50,000, 70,000 and so, or next level would be, let's take a loan for 3 to 5 lakhs for a car. Interest rates are low, by the way. What is the government trying to do? It wants you to spend, wants you to consume more. Now, once everybody becomes comfortable with taking loans up to 3 lakhs, 5 lakhs, 10 lakhs, then what do? Take a loan for a house. Whatever you take the loan for, just imagine, guys, how you use it, when you use the product, nobody cares. From next month onwards, you have to pay the EMI. And if you have to pay the EMI, who starts making income? Who starts making money in the economy first? The banking stocks. So if the banking stocks will be the first ones to reflect recovery in the economy, should you not be investing in banking stocks? I ask you this question. If now you know that the government is focused on making the banks successful first, should you not be thinking on those lines? By the way, if this is interesting, I encourage you to focus on trend lines and not just headlines. What are trend lines? It is the trend in which our economy is moving. It is the trend in which our stock market is moving. It is the trend in the interest rates. So guys, I move ahead to the portion which might sound even more interesting to you. Whatever you spend your money on, whether you are able to afford it or you have to take a loan to purchase it, there are stocks listed around that. So whether you are putting money to buy a car, to watch movies, to eat out, to travel in your favorite airlines, or move around in a train, or you buy some kind of digital gadget, why not spend some additional amount and buy the stock? As in the economy, people apart from you will spend on the same stocks or same brands. The prices of these stocks will go up and you will feel good about your investments. So most of you probably have gone on Indigo Airlines. Most of you would have gone to PVR. Most of you would have had at some point in time a Maruti car. There are stocks, and the government is desperate that all this activity comes back to normal. Are you the one who participates in the growth, or are you the one who only keeps on spending the money? You're not investing your money. So think about it, guys. I, in fact, have an Airtel connection through which I'm using this Zoom link. I also have the Airtel stock. And whenever I have to pay the bill, I have been collecting Airtel for a long time. I probably sell a few stocks or I take some dividend out of it, right? Isn't that a cashback mechanism that you can create for your own self? Whether somebody else offers that or not doesn't make a difference. If you are committed that I will probably spend a portion of my money and use a remaining portion to invest in the same kind of stocks, you are better off, you are better prepared for the future. Let me tell you why. Even the government wants you to do it. Why? Here is the news headline. The government says, I do not want to increase the interest rates. I don't want to spoil the dream run of the stock market. If you are reading these articles, if you are hearing me, this is exact words from our RBI governor 2 days ago. And what was the outcome? Today, the market skyrocketed, guys, skyrocketed. And we are touching close to 17,000, the sweet 17 spot. That's where our economy is headed for. Again and again, guys, if you don't know the linkage, if you do not understand what to focus on, what are the trends, what are the trend lines, we are not going to be successful. We want to increase the odds. So if this is something now you know, you probably would also understand that if our RBI governor is saying that I'm not planning to increase the interest rates, whatever he has reduced last year, the finance minister is hell-bent on giving out more loans. Where do you think we are in this curve? The interest rates, the green color line is pretty low as of now. The economy has just started to move up, but the stock market has already gone very high. So do you think we are somewhere above point A? If this is point A, we are probably here where my mouse is. There is more room for sure. There is more room for the stock market to go up. There is obviously room for the economy to go up. But please understand, the moment RBI increases the interest rates, what will happen to the stock market? It will start to flatten out and then eventually come down. By the time your economy is at its peak, stock market has already started to come down. And if you understand this, this would be a good time to exit the stock market. Since the last 1 year, it has been an awesome time to enter the markets. This is the time to exit the markets. Not today, as I said, let the interest rates go up. That particular news, if you are already invested, that would help you come out of the markets safely. And guys, this is what I meant by beating the odds in market entry. So before I move to the next section, let me see if there are any questions. Diwakar, if you can help me with that. Anything anyone want to know before I move on to the next one?
Not yet. We still are waiting. I'd request the audience to share their questions. Sundaresan is asking, what is your prediction?
So look, here, I think we don't leave it to prediction. Basically, the guy is completely clear that we have to keep the interest rates pretty low, so that, I mean, these guys are working hand in hand, right? So the finance minister wants you to take these kind of loans. It also wants you to take loans to do new businesses, basically, right? So unless and until new businesses are set up, new loans are being taken, and the banking stocks go up first. So here, if somebody has actually taken away some key insights. I told you, even before the overall stock market goes up, which is the set of stocks that should go up first? Before the entire broader index goes up, which is the set of stocks that should go up first? Let's see who was paying attention, if they can answer it. Yes. Yes, it's banking stocks, right? We clearly said the banking stocks should go first. So if you want to know, here's the prediction line, right? How will the stock market behave? The overall Nifty will behave. Keep a watch on the banking stocks. Keep a watch on the Nifty bank index. That is the leading indicator, if that answers your question, right? So
great.
Let's move on then.
Sumit, maybe if I could sort of ask a few questions. It's very interesting you're talking about the leading indicator. And I just wanted to understand, is there a connection between global markets and Indian markets?
Oh, absolutely. So very important, very interesting question that you brought up, Diwakar. See, most of the times our economy, okay, let's put it this way. The stock market is largely fueled by foreign capital. And globally also the interest rates are pretty low. So some of you who have been following the news articles around what the US is doing, there was a clear discussion that the US is about to increase its interest rates. So Friday was the meeting when the Fed chairman had to announce, are they planning to increase the interest rates? Now the decision has been postponed. They are saying that we might delay our plan to increase the interest rates. As a result, our economy went up. So our stock market went up for same reason, right? Because the foreign capital will continue to be in our Indian Nifty market or Nifty index only till the time the Fed in the US does not increase the interest rates. The day you will hear that news, economy will probably feel that this is time. The stock market will feel this is time, and it will first come down. It is quite possible that the timing of RBI governor and Fed chairman might coincide. India and the US might increase interest rates at the same time. So be careful, keep a watch on these articles, keep look out for these names, and Fed chairman or RBI governor, you will be able to predict the fall. Yes. Was that helpful?
Yeah, thanks, Sumit. And just for our audience, do you have any preferred sector to take advantage of these economic upturns and make money?
So look, the way you have to think about is, if loans have to be taken first, right? They will probably be the smaller loans. So if you have financial services companies which offer smaller loans, and this time maybe to the underprivileged also, right, or to women, there are banks who focus on that. So small finance, NBFC companies. In fact, there is an interesting name, Bajaj Finance, right, for the first picture out here. Bajaj Finance is quite focused on these kind of items, right? And then you would have the housing loan companies out here. All this will rise. So first the banking stocks will move up. You will see the white goods stocks, you will see the automotive players, and then you finally see the realty stocks like DLF, Oberoi, Prestige. There's so many out there. If you do your research, by the way, if you've been thinking, how should I identify what's coming up? Think what's behind them. So if a reality player has to offer you a house ready-made, he has to give orders to the cement companies, to the steel companies, to the plastic companies, the air conditioning, the piping, the sanitary guys. All these stocks will come up. So this is how you have to think. The end product requires a lot of ingredients, a lot of material from various suppliers. So it's all interconnected,
Thanks. We have two questions before we move to the next section. So one of our audience members, Rupal, is saying that the banking index going up is an indicator that the stock market will go down. Is that?
I don't share that view. I don't know why that person is sharing that. So maybe they have some reasoning. But this general framework, as I said, is in front of you, right? So who's committed? Who's committed, by the way, to keep pushing the loans? Our finance minister. Who's committed to keep the interest rates low? the RBI governor. Why are they doing it? Why are they doing? They're trying to first save the banks. If this banking sector collapses in any economy, the entire economy collapses. You cannot afford to let the banks spoil their fun and then the overall economy.
Got it.
Cool.
And then one last question is, what can we look forward in the FMCG sector?
So whenever there will be some uncertainty, especially what happened in the last 2 weeks, whether RBI will increase the rates or not, whether Fed will increase it, people park their money into safer assets, safer stocks, which are going to be all-weather stocks basically. So whether it comes to FMCG players like Hindustan Unilever, Nestle, Britannia, Dabur, these stocks start to rise. Those who have been observing the markets, even if this is exhausted, the last point people start investing in gold. And that's when you see the recession coming in back again in our economy. I don't think that's happening, by the way. But whenever the stock market will come down, the gold prices will go up. There is a inverse correlation. If you are building your portfolio, guys, don't forget to keep gold. Don't forget to keep FMCG stocks in it.
Thanks, Amit. You can move on to the next section.
Cool. So I want to move on to this one. I think most of you will, maybe some of you know this, some of you will be hearing for the first time, that you can take insurance. For your equity investment. So by the way, most of you again would have seen this. This is how your insurance contracts for car insurance look like. You have a policy, right? Let's say a Reliance General Insurance Company insures your car. There is a car which is valued, let's say 4 lakhs or 5 lakhs. And there is a premium that you pay, thinking that if anything happens to my car, at least there is this insurance company that will compensate me. And the compensation value is also mentioned on the policy statement. So I want to ask you guys, whenever you are building your own portfolio, what is that you have? You have your small caps, mid caps, large caps. And this is what something that happened last year. If you have been invested in the market and you had no idea where the economy is growing, you were not watching the trend lines because you did not know the interlinkages, that's fine. And then suddenly this kind of crash happens and you are feeling, what the hell happened here? If you would have taken an insurance, you would have been compensated for this entire fall in your portfolio. And this, guys, in the stock market is known as the put option. Put option. If you want to take any kind of insurance for your equity investments, it is not called insurance. In the stock market, it is called put option. Yes, for most of you, this is news because these are the exotic investments. This is what I teach. This is what I want people to know, that Indian stock market is extremely brutal. And if you do not have all your tools ready, if you do not have your thinking in place, chances are you will be the first one to be ripped off of your capital. And guys, that's what the stock market is all about. Nobody in the stock market rewards the person. One person gains, the other person loses. Are you the one who's going to gain or lose? So here's another news for you. If this is news, let me give you even bigger news. In the stock market, if you think that it can go down and you can get compensated for the market's fall, there is a way to be compensated for the markets going up also. And that's called call option. These are the exotic investments, as I said. Please note this down. The insurance is like your protection, and the call option is like your shield. Sorry, your sword. Can you see? Stock market is like a war. As I said, one person wins, the other person loses. chances are that so far you've been losing the battle because you did not have these two. What is the shield going to do? The put option is going to protect your existing investments. What does the sword do? Sword is the call option. If you have to take advantage of the stock market moving up, somebody just asked this question, what is the call option? I'm just repeating myself. If you want to protect your portfolio from the markets going down, use this shield. It's a war at the end of the day. It's called put option. If you want to move ahead faster, you want to destroy your enemy, you probably would need to use your sword, and that's a call option. How you use it, of course, I cannot explain immediately in this session, but this is what I teach and I'll talk about it. How to think of these exotic investments. Are you the one who is still learning how to enter the market, or you are already there? Then both these options are for you. As I said, these are optional. These are options. You don't need them. But if you are deep and you care about your investments, you'll probably be thinking about it. So guys, having your shield, having your sword when you go for a war is absolutely essential. This is how you will further increase your odds of winning. I want to go to my very quickly this third section. How do you get dividends from non-dividend paying companies? So some of you must have purchased some kind of stocks, and those stocks don't really move, right? Think about it like purchasing a house property. We all have one house in which we live, and then sometimes we do buy another house for investment purpose, thinking that someday the price of that stock, that house, will go up. And it just doesn't go up. The market is down. There's oversupply. If you're staying in Noida, if you're staying in Gurgaon, there's ample supply of real estate. And what do we do in that case? We put the house on rent so that we earn some kind of basic income till the time the prices have gone up. So guys, why not put your stocks on rent? This is also another method that the stock market allows you to make money out of, but we are not aware. We are not aware of this. So let me tell you guys, as you can see, most of these things were quite new for you, right? I teach all this and much more through options. And if you are wondering, what is this option market all about? Option market, or the derivative market, if you can see out here, is one of the largest market. In fact, it is the largest market. If you see these spheres in front of you, the regular stock market globally is $77 trillion. And on the left-hand side, something which you were not even aware of, it is 7 times bigger than the actual stock markets across the globe. $500+ trillion market, much bigger than the global real estate, much bigger than the global debt markets. And guys, another surprising news, if you are not looking at this particular market in India, as I said, Indian markets are very brutal. And if you don't know anything about options, you're missing out on something, because here is the news you should see. In 2019, NSE, or National Stock Exchange of India, became the largest exchange in derivative trading. We even beat all US exchanges in millions of contracts in 2019. And we did this again in 2020. So this news came in January 21, that in the pandemic, you know what most people did? They made a lot of money through derivatives, through options. And guys, this is the truth. The rich will continue to get richer because they know the rules of the game. Because they know the rules. You probably are not aware. As I heard some of the comments, as I saw on the chat. A lot of this was new. A lot of this was news to you. So guys, here is something, as I said, I teach. Over the last few years, this is mostly in the pandemic, pre-pandemic photographs that I'm showing you. I've taught more than 3,000 people across the globe. I teach how to invest in the options. I also teach how to pick up stocks and create portfolios. And this is the kind of program I work with a lot of people like you, whether you are a retired person, whether you are a student, whether you are in your business or a job, and you're just thinking on something on the side as an income. Value investing and options comes as a basic program. This is, as I said, Indian markets are ruthless. You can't just go in with buying stocks. You have to have an understanding of options. So what am I offering you here? There is a program. It's a program which covers all of this in depth. So the first item on that is economic indicators, business cycle, something which we just discussed today. There is portfolio creation and so on. So if you, by the way, think that this was interesting, there is a program around it. And the regular price of that program, guys, is more than $1 lakh, $1,600. But Diwakar said that let's make sure that it comes as an affordable price nowadays. So for people who are in this session, if you want to go individual with me, I'm going to be teaching you 20 hours. If you think I could give you some insights, I could change the way you think in the last 40 minutes. You probably can imagine what I can do working with you for this 20 hours. So if you want to go individual, the cost is $1,200 US. If you want to join me on a group, here's the interesting part. It's $270, guys. $270 is what you need to pay, and you can be a part of this interesting journey with me. And if you're wondering when does it happen? September 26th, less than a month. Every Sunday, 12 noon, 2 hours or more, 2.5 hours also possible. You can join me. What you need to do today, if you want to book individual sessions, your dates are open. You can have a separate discussion. Just drop an email. If you want to book your group session, the link is there. Diwakar, can you share the link on the chat? The same link, I think you can.
Yeah, I just did that along with your email ID as well.
Yeah, so all you need to do, guys, this is open for you guys only at such a highly discounted price. $67 US is what you need to pay today. You can book your slots. By the way, I focus more on giving individual attention. So if we have more than 8 people, we'll probably create 2 separate groups. It's not a session where there are hundreds of people sitting on the chat. We will have live discussion. You could be talking to me. You could be the one sharing your screen, because I'm genuinely interested in improving your knowledge and clearing all your doubts in your stock market journey. By the way, if you think over it, this will be a 2.5 month journey. Join us. And those who want to stay connected on my ideas, what I do, what I predict, I'm there on LinkedIn. My LinkedIn profile is Sumit Dora CFA. If you will type in, I can give you this address also. Stay connected. What you saw today is also there on LinkedIn. I do keep putting articles. This is the same economy moving through business cycles. And guys, finally, you have a choice. You have a choice. pivot or persevere. The shift happens if you want it to happen. That's all from my end. Thank you. Time for more Q&A.
Thanks, Sumit. That was an awesome session. I got to know so much. It's a good refresher actually for me. And it's really incredible that you've been able to make this offer. You didn't talk about it before, but I did mention that we make it affordable for our audiences.
Yes.
Thanks a lot for that. So yes, people in the audience, I would recommend you to definitely get in touch. If you feel that the session is amazing, go ahead and book your slot right away. We do have a few questions.
Yes.
I think, yeah, I think people are just talking about or giving comments about what you said.
Sure.
Yes, there was a comment about insurance on equity and explanation about call option.
Yeah. Well, maybe you can highlight the question or repeat that for me. Which one do you want me to pick up?
Could you explain the call option aspect?
Sure. So basically, if you have to think over it, what is the opposite of compensation being received when you get hit, right? Let's say you are driving a car, the car gets hit, and then you go to the insurance company, right? Let me bring that slide up. So yeah. So the value of your asset goes down, right? And if you have been insured, you will be compensated for that. What is the opposite for that? Whoever asked this question, just imagine that you own a car, right? And your car increases in value. How would it increase in value? Maybe Narendra Modi comes and signs on it. Maybe you take a picture with it. The value of your car goes up, right? So how do you ensure that that value is captured even before you have sold your car to someone else? That is the call option. To capture the increase in value. It's a reverse compensation. Here you are being compensated for the value of your asset going down. Here, the call option, you are being compensated. It's not compensation, might not be the right word, but you are already cashing on the potential value of your asset going up. As I said, exotic options, exotic investments, it's hard to imagine because you have not come across these concepts. But it is a tool that if you think Nifty is about to go up to 18,000 in the next 2 weeks, in 1 month, and if you would have bought a call option, you will see money in your account right away. As I said, the rich get richer because they play in options. I hope that answers the question.
Yeah, it does. And if I were to sort of ask a further question, so how much of knowledge do you expect people to have? A lot of our audiences are probably just students, or they're homemakers, or they're lawyers.
I'm expecting zero knowledge. If you are able to read the newspaper, if you know what business activity is all about, if you are involved in some kind of activity, that's enough. If you are a student and if you know what GDP is, if you know that we are all impacted by economy, that's all I need.
Got it. Great. I think that would really help our audience. And that's what they are all here for.
Sure.
Some of them are experts, but a lot of them are in the process of learning about money and finance. And it's great to hear that just very basic knowledge could help them generate strategies through your programs.
Absolutely. So you probably would have seen that Nifty has gone up, Bank Nifty would have gone up more, right? And if you see further, the NBFCs or the financial services are like crazy up. Federal banks and all, as I said, don't take it as a recommendation. Watch out. If you're learning, if you're planning to apply the framework that we have just discussed today, keep a watch on the stock market, keep a watch on the banking index, keep a watch on the sectors we just discussed. That's where the money is about to flow. That's what the government is encouraging us to spend on. And it's a no-brainer. If we spend our money over there, those companies earn revenue, those companies make profit. If those companies make profit, stock prices of those companies go up, and then feel good.